Welcome, ladies and gentlemen, to Commodity TV in a new edition of our online interview series. We want to get an update today from Fury Gold Mines. And we have here Tim Clark, the CEO, and also Brian Atkinson, the Senior Vice President of Exploration. Hi, guys. Before we start, I just have to say something because of the BCSC. This video is paid for and on behalf of Fury Gold Mines. So wonderful. Good day, guys. Hope you're doing well.
Morning. How are you?
Good. Thank you. Yeah, great to see you. It has been a little bit of time since we spoke the last time. But I must say, you guys had really interesting and also fantastic news out, meaning that you had the results of the PEA for the Eau Claire gold deposit. And I think it's worthwhile to talk about it. So, yeah, Tim, maybe you want to start and give us some metrics and some insights into that, please.
Sure. We've got to the point with our Eau Claire mine in Quebec that we wanted to start bringing this towards a pathway to production at some point. So you start with your PEA, and we spent the last 9 months kind of putting this together, and we wanted to bring it out to investors to sort of highlight what we think has been a lot of good work over the last 3-4 years with Brian and his team, and how we think that this asset's got a lot more legs than the market does. So this helps us sort of quantify things. And we came out with effectively three cases or scenarios. We got the base case, which is a standalone net present value about 554 million, and after-tax IRR of 41%. And then we put up, because we think that there's potential for toll milling, and investors can look at a map and see where sort of the mine, the opportunities are to actually mill this, are nearby. But the hybrid case would be a 2-year toll milling scenario, and it brings us up to a net present value of 610 million and an after-tax IRR of 53%. And if you went all in on toll milling, then it would bring it up to 639 million and an IRR of 84%. So huge advantage in toll milling. But this asset is a standalone at this point. And our assessment, if investors want to look at the PEA, they'll see we were pretty conservative, I think, in a lot of our assumptions. We used our $2,400 gold as our financial sort of scenario, but we did use lower numbers, 1,900 and 2,000 for our mineralization resource and engineering. And I think that that gives us a 76,000 ounce a year project over 11 years. We know that there's a lot more upside because we left a lot of the ounces in the resource. We're only using about half of them, and we're excited. And I think it's going to be sort of a nice change for us.
Absolutely. No, I think also those are fantastic numbers. I mean, Eau Claire was always a really interesting project, and I think it's great that you guys have showed now really, like the first numbers where you really can count on and also build on. To me, it looks a little bit like that you guys have even done more than you needed to. Is that right? I have the feeling it goes more.
So we mentioned, we've talked about this earlier. We've got 2 guys on our board who came from Goldcorp and Agnico. There are sort of sitting geologists and mine experts, and these guys, they come at it from a very risk-off scenario. And I think the PEA is supposed to show what it could be, and then the full feasibility is sort of closer to what it is. And they definitely dug in and wanted us to dig in and be a lot more encompassing. And I think what it means is we have less work to do on our PFS. Brian makes some very good points about in terms of the cutoff grade that we use. It's very tight. We set up a very tight, sort of fulsome, realistic view of what we think this is going to look like.
Absolutely. Brian, before we come to you, I have still one question for you, Tim. When I look at your scenarios, base case, hybrid, toll milling, Yeah. The difference in the AISC is like nothing. It's like 1 to 2% or 3% maximum. So if you would go with the toll milling case, you only would have to invest, let's say, 117 million Canadian dollars approximately, yeah, which is like nothing. This is easily to finance. But with the toll milling, you have the risk that you need a partner. So with whom would you partner, and could you maybe then also secure that toll milling for the next 11 years?
Well, that's a great question, and, I think, eh, look, the most obvious scenario would be to send it up to Eleanor Mine, and, but it's owned by Dilmar, the Indonesian, private equity
Mhm,
group, and, we've sat down and spoken to them in June, but they've been busy, drinking out of the fire hose with their new project. They only closed on it in April. They did, apparently, 100,000 meters of drilling this summer on their own property, and they're looking to fill that mill. It's, running at half capacity, and they know they gotta add more. Whether they decide that they want to team up with us or work some sort of agreement out, we don't know yet. We haven't sat down. They said they'd like to sit down, at the end of the summer, which is
mhm,
now, about now. And so, we'll see what they say. But, look, they're financial guys, and, I think the numbers will drive their decision, is my guess. And, I think that this PEA should be highly interesting to them, and
mhm,
I know it would be for me. And if you look at it on paper, we know from Goldcorp, they did the testing, the chemistry works up in the mill. It's 50 kilometers away. It solves one of their problems in terms of adding ounces to their mill, and it solves a lot of our problems and makes our mine a lot more profitable.
mhm,
So to me, I can't put words in their mouth, but to me, that would be a very obvious pathway to pursue,
mhm,
and that could provide significant upside to this scenario. However, at 41%, at $2,400 gold estimate, that's a pretty good number. And in my book, if we wanted to add more ounces per year, we could lower the cutoff grade, basically, and we could have a nice producing, very profitable mine on our hands, and, I don't think it would take us that long to get there. And,
mhm,
that was so when I sat down with a lot of investors my last trip to Europe,
mhm,
um, and through you guys, more often than not, the big question investors had was, "We like the optionality of Fury. There's a lot of ways to win in this company, but we would like to see a pathway to production for Eau Claire." And, I took that to heart, and we put out this PA basically on the back of their suggestion. So,
absolutely. Yeah, which makes absolutely sense, to be honest, if I look at those
yep.
numbers. Brian, question for you. The first thing what I saw is that you guys will have an open pit mine and an underground mine. From what does that come? That's quite new for me that you do both together.
Yeah, so we actually looked at a bunch of scenarios as we came through this. We looked at a small open pit, medium-sized open pit, and a big open pit, and we landed on the small open pit actually, just because it was less ounces overall, but the NPVs and total cash flows and everything like that were quite a bit better. So and then we started looking at scheduling and putting a 1,200 ton per day mill in and having the material to put through that. And with that small open pit where we were going to put the portal was only 2 or 3 levels down anyways, so we're not adding a whole lot of extra upfront costs by having the portal stand alone. And then
Mhm,
we get to shrink from the other side was the mine life we wanted to look at. So doing it this way, we shrink from a 13, 14 year mine life down to the 11-year mine life, right? So you get those ounces out of the same ounces out of the ground in a shorter amount of time, improved our NPV quite significantly. So with just a small initial uptick in the
mhm,
capex.
mhm. So the open pit, as far as I understand it, pays for the financing to build a mine.
No, in conjunction with the two, and the way it's sort of scheduled out, the underground starts with a small bulk sample through, and then goes into sort of full production in year one, and then the open pit is also in full production year one. So those combined ounces and grade, this thing turns profitable very quickly. The paybacks range from 2.5 years in the full standalone to just over a year, 1.15 years in the toll milling. So the thing that Eau Claire has always had is grade. And when you look at our fully diluted underground grade of 5.22, you don't see that anymore. That's what people's resource grades are if they're lucky. And then when
Mhm.
they dilute them, they go down well below 5 grams per ton. So we're nice and tight. We're 75, 76% in measured and indicated. So we kept the deposit, we kept the development nice and tight.
Mhm.
And we've got another 800,000 ounces, resource ounces sitting there that with some additional work come into any future mine plan.
Absolutely. Yeah, I think there's also a lot of upside there. We talk in a second about that. But what I also found interesting is your average gold recovery of 95%. That is quite high, I would say. So, what have you done to prove that? And is that really sustainable?
Yeah, so we've done initial levels of metallurgical work, and that those recoveries get up to 97, 98%. So we went conservative on that with something that could work at an industrial scale. Some of those higher recoveries require a finer grinding than would be sustainable in a commercial scale. If you look at a lot of the orogenic gold systems, because there's no metallurgical complexities here. There's no the gold's free. You get good recoveries from gravity, and then you follow through with a leach. And these are proven in the lab. Or the metallurgical engineer that went through the work that was done, that was the number they picked, and it seems to be realistic. Obviously, we need to do more work on that as we progress from the PEA stage onto the PFS stage, and that's going to be one of our focuses, is just seeing if we can confirm that 95% and that it's maintainable in an industrial setting.
Okay, super. When I look at the updated mineral resource estimate from 2024, I get the impression that there is a lot of more room for, yeah, many more ounces here to be brought in, right? So what do you gonna do to, how can I say that, to bring up those inferred ounces into the mining plan?
Yeah, so a lot of that's based on continuity, right? So we did the underground stope optimization at $2,000 gold. So you have to the slope you're going to has to pay enough money to support the lateral development to it. So some of the resource blocks, especially in the hinge area, which we've just discovered in the last 3 years and built up and
Mhm,
added a significant amount of ounces there. It's just a continuity, so we just need to go out there and drill some more. And while you're looking at that resource statement, you see as we go from inferred, which is the lowest confidence level, into indicated and then measured, our grade is always increasing as we go up category there.
mhm,
So that's a big thing. A lot of deposits fall apart as you get more drilling into them and the grades go down, whereas Eau Claire seems to, historically has improved the more drilling you get into it. So that's what we need to look at. And between using a higher gold price, right? Today we're sitting at $3,550 gold, right? We use
mhm,
$2,000 gold for the stopes and $1,900 gold for the resource. So there's a lot of improvements there, and we feel we can maintain the grade as we're adding those ounces back in.
mhm.
So Jochen, we started this process last winter, and gold's been up a lot since then. So once you start the mine plan or the engineering, it changes when you go back and do $2,400 gold. Even though you put it in, even though there's a sensitivity analysis that kind of captures it, it doesn't capture all the potential. And so there's a lot more ounces that if once we go into a PFS, you could see a much more coming out of it. And at the same time, we've also had other producers come in and look at what we've been doing, and they've said the same thing. What this has done is kind of shown us where we need to do that little extra drilling to bring in a lot more ounces to make it more economic. And so they've all said, add to the continuity, just keep
Mhm.
drilling around the edges. But we won't want to keep diluting the company. And we wanted to get out with a PEA so we could show and other producers this isn't just for the investors. This is a very good tool for us to show potential buyers or investors from the production side into our resource. And what we're finding and hearing out there when we sit down with a lot of these guys is they're struggling to find mines to buy. They can't
Mhm.
find them, and they're coming in. And, we've seen these guys from Australia come through. They said there are no more 2 million ounce close to surface
Mhm.
resources left in Australia. They're all coming to Canada now, and Canada's trading at a discount. It's 30% lower for all the share prices because they have a
Mhm.
captured audience in their market. But and the political issues too, of course. A lot of these companies don't wanna go down to other more politically stressed areas of the world. Canada is an incredibly good one, but the biggest question that and I keep pointing this out, and we've talked about this before, we had a producer come in, and they drove all the way up from Montreal because they didn't believe that we had the infrastructure that we said we had. And they didn't understand it until they drove on the highway next to the 18 wheelers for, I guess, 13 hours. And they drove right up to our property and they couldn't believe it. And we literally, they're like, you have this picture of a spillway, electrical spillway to get into your property. You even have a gate, like you already have everything set up. And so the biggest worry for some of these producers is the James Bay area. And they don't understand that it's all built up with roads and power lines. There's airports, there's facilities for people who come up and work there. They can stay 45 minutes away, full kitchens and apartments you can live at. It's ready to go. It's ready to be shifted into that next level. So
Mhm.
when you get a combination of high grade and really good infrastructure, your margin of profit is much better, and that's what they like about us. And so w- there, like I said before, there just aren't a lot of resources that are 5 million, 10 million left. They're going to have to figure out how to make these 2 million to 3 million operations, yeah, work, and yeah, and they're doing it, and they're interested. So it's coming our way, and we what I've always said is our goal has been to make ourselves the best in class in the junior market, and we've done that financially with the Dolly Varden, and now we're positioning our main resource, Eau Claire, to be a development play. And then on Committee Bay, we've got the biggest and best gold company in Canada as our partner supporting our drill program up in Nunavut, which we just finished. So we're hitting on all cylinders here.
Absolutely. Before we talk about Nunavut Committee Bay, one other question on Eau Claire. Um, let's assume, and I know a forward-looking statement for the regulator, so be hypothetical. Let's let's assume things are going the way how you want it, yeah, with PFS and DFS. When do you think that project could be in production? 4 years from here, 3 years?
Ryan, we've had this discussion. Yeah.
Yeah. Yeah, we purposely left that discussion out. Obviously there's some work that needs to be done, but if you look at Quebec, the jurisdiction that we're in, it's very friendly to it. We're going to stay under the federal review production levels, so it stays completely within Quebec. So, given everything goes perfectly well, we're 3 to 5 years out. So that's, if you put a pin in it now and go, that's sort of where we need to be. Yeah. Yeah. So
Yeah,
it's
okay,
it's
sounds
very
super.
quick. Yeah.
Okay, that sounds great because my gold price target for 2032 is 9,250 US dollars.
Whew. Boy.
And
Yeah.
and the other thing too is
Yeah.
we do have a good relationship with our First Nations partners there,
Mhm.
and that we only have one. A lot of companies have a lot more, two or three, and those they're a focus for us. So the goal here is to bring them along with us, and we
Mhm.
don't see that as an issue at this point.
Yeah. Okay, super. Yeah, let's talk about Committee Bay. This was for me always, yeah, like the hidden super joker in your company, because the project is so large and so big. I mean, 300 kilometer long greenstone belt. This is the only greenstone belt, as far as I know, which is still left and owned not by a major or by a large company in that sense. And so I could imagine it was probably one of the reasons why Agnico Eagle yeah, participated in your company, because they are your, let's say, neighbors is maybe a little bit too much, but they are quite close to you. I know 500 kilometers is nothing in Canada. And but it looks to me a little bit like that Committee Bay is now really coming into the play. So what are your plans here? How do you see Committee Bay for this year, next year?
Um, well, first off, I mean, I think one of the reasons why Agnico is sort of in this is we got them in initially 4 years ago to help finance and restart us. But more importantly, we noticed that their Hope Bay project was going from development to production, and that
Mhm,
opened up a pipeline for them. They like to seed potential future production opportunities and discoveries, and so this fit nicely, and we went in and presented them, and Brian basically in 15 minutes closed the deal, and they're like, "No, this makes sense." And this was with their senior geologist,
mhm,
and they've since been up to camp and visited the area. I think that the general feedback we get is really encouraging, and that they haven't even seen the assays yet, and they're already talking about wanting to go back up next year. They've financed all the fuel to have a much bigger project next year if we want to,
mhm.
and so I think that's extremely encouraging to have a partner like that and is excited about it. Brian's been up there a lot more and can talk a lot more about what's been happening at site though.
Mhm. Okay. Yeah,
Yeah,
Brian?
I'm up there now, so or on my way back up. Yeah, no, we're just we wrapped up program focused on Three Bluffs and then out at the Raven occurrence. So we've got some new shear zone targets at both of those that could blow things wide open up here. It's a high grade resource that's only been drilled down to 300 meters below surface. So these things can go deep, and
Mhm,
it's literally defined by the limits of drilling. So every hole that's been put in and around it has intercepted good gold mineralization over reasonable widths. So we're pretty optimistic about what we saw in the drill holes completed this year, and we're in the waiting game of waiting for those assays to come in and see what's there. But we had a great season up there, great weather, great drill crews, good overall production. So we're pretty happy with how the season went. I think that's going to reflect in hopefully it reflects in the assay results we get.
that would be great. Absolutely. Super. So that thing is also on track, and I think you also want to drill next year a lot there, right? Um, then I saw a press release also, and we had questions from viewers that you guys now are also going into lithium. So what's going on there?
Yeah. So we bought Quebec Precious Metals last winter, as you know.
Mhm,
I think it was a $40 million company 2 years ago, and we bought it for four. And we bought it because we liked the assets around the Eleanor mine, and so it doubled our land package in James Bay, and we
mhm,
thought they had some nice low hanging fruit in terms of drilling opportunity to create a resource up near there. And we just finished that project, but within that portfolio, we got some other assets. Kipawa was one, which is the rare earth play, and then we've got some lithium scenario going on too. And basically, they had already paid for all the drilling, and so we just put it through. And our goal here going forward was really just to monetize the assets, clean them up, monetize them,
mhm.
and use the money towards Eau Claire or Committee Bay.
Okay, super. You already brought it up, Kipawa with the rare earth elements. Can you give us a bit more insight? what is going on there? What can we expect, or what is the purpose of that project?
Well, the project, when I first was talking to investors, they were before we even bought it, they were like, "Don't buy it for Kipawa; it's worth nothing." And basically, what happened was, it's the only full feasibility, on any rare earth project in North America that has yet to be built. It's worth something. But the
Mhm.
problem was the relationship with the First Nations. The original management group before us lost their trust, and they wouldn't support it. So Brian and I flew up in late spring. We sat down with 18 mayors and 3 First Nations or 2 First Nations there, and effectively the decision was to create a committee, and they had to put the committee together in the town to work with us, and the idea was, I think that there's a lot of incentive now to get it going again. The paper mill is going out of business. They need jobs, and of course, they're all well aware of what rare earth is in the news within the U.S. in particular. And this is a project that should be block and tackle. It should get built. I think we just want to put it on the pathway to get there. Once we get this committee set up, I think a lot of things will happen. There's some misinformation out there. And I think we come at this, we've always worked well with the First Nations group on our side, and a lot of it is you got to be inclusive. You got to include them in all the decisions, and I don't think that was happening before. Brian has had a lot more experience with this than I have. I don't know if you have anything to add, Brian.
No, I think that's exactly it. So the previous operator, though it has a full feasibility studies, they didn't interact with the communities and the First Nations and other stakeholders before they completed that. So they just kind of walked in with a complete
Right.
feasibility study saying, "Hey, this is what we're building right there." Whereas we know that that's not the way it works. You've got to work together on designs
Always.
and ideas and optionality on it from day one. So that's what we've done is we've taken that step way back. We're cleaning up some old messes that were left behind at the core storage and that, so it's going to look a lot more professional and like a real company is operating there. And then, as Tim said, set up this committee and see where it goes. Yeah, that's all
Mhm.
we can really do at this stage.
What rare earth elements we are talking about there?
So the thing with rare earths is they don't occur separately. If you're at a rare earths deposit, you get them all. The thing with this one is that it's really skewed to the heavy rare earths, which are the ones that are much more in demand currently with all the technology in that. So this one is over 65% skewed to the heavy rare earths, which, as I said, are the ones that are more of
Valuable.
interest commercially right now. Yeah.
Yeah, they're more valuable.
Mhm. Have you done already any metallurgy tests? Because to me, with rare earth is always the key question is, do I get it separated? Do I get it out of the rock? That's for me the first question always.
So we haven't done our own, but obviously there was some that supported the feasibility study. And to be fair, it was a 2013 feasibility study, so it is aged, and technology has changed significantly in the extraction of rare earths. So that's something that would need to be relooked at for sure. But it was obviously good enough to support a feasibility study back then.
And the other key part was the radioactivity is a big problem, uranium, in a lot of these rare earth plays, but not with this one.
Okay, super. That's perfect. Yeah, great. So, Tim, the three most important things you want to achieve within the next 6 to 9 months?
I think, look, we really want to drive home on Eau Claire. We'd like to get back there and see if we can keep moving that needle appropriately. We've got a much better plan after working through this PEA, and then we'd like to, tee it up where we really start accelerating Committee Bay.
Mhm.
And I think investors should be excited at that. The gold price is going to support a lot more of that action. And one of the things that one of the investors noticed this week was when we put out our PEA, the stock was up 8 or 9%. A year ago, that wasn't happening for any company. The gold market on the equity side is much healthier, and I think if we have good results out of these drilling, uh, um, numbers, that we're gonna get a better share price. A better share price allows you to raise more money without diluting your company, and the more money you raise, the more you can accelerate your drilling and bring all this forward. And again, I think we're gonna make a little clear decision on Eau Claire on a pathway. I know I'd like to see this built. I think it should be accelerated, whether you get a partner or not. I suspect there's going to be some interested parties around Eau Claire. I think the big pie in the sky is what is the Eleanor Group going to do? But we also have other companies calling on us. We're going to Beaver Creek next week. Half of our meetings are with mid-cap producers. Um, Notably for investors, we would go to these things for the last, 3 or 4 years, and you'd have some brokers, but now a lot of the bigger brokers are wanting meetings with us. I think they see us moving into development. There's more profitability in Fury. We're also, our market cap is up quite a bit. We're up 130 million. It's crossed that $100 million barrier.
It's important.
They see Agnico backing us. They see the PEA out. So I think we're going to get a lot more attention from the institutional side. Yeah, things are happening, and we want to keep the foot down on the pedal.
Just one thing, make sure that Agnico is not buying you at only 80 or 90 cents.
Right, right, right.
Because that would be the natural fit to me.
Well, I gotta be honest with you. My biggest fear is someone's going to take us out before we get our share price up, because if you look at the valuation of our ounces, my stepfather owns a lot of shares, and he's been doing this for 50 or 60 years. He just shakes his head. He's like, I don't get it. He's like, what are investors waiting for? It's like
Mhm.
free money here. So
Correct.
that's why I keep wanting to buy more shares myself, and we're excited. I think it's going to be a good 18 months.
Mhm. Absolutely. Super. Tim, Brian, thank you very much for the update. It was a great half an hour. And yeah, I wish you well. And I think we talk soon then. And lots of success at Beaver Creek. And please say hello to Jessica.
Well,
Okay. Well,
Super. Thank you very much. Yeah, ladies and gentlemen, that was Tim Clark, the CEO of Fury Gold Mines, and also Brian Atkinson, the Senior Vice President, Exploration of Fury Gold Mines. Yeah, you heard it. The company is doing extremely well. Fantastic PEA with lots of upside. And please don't forget, $2,440 was the calculation of the PEA. Just by today, this is $1,000 below today's gold price. And as you know me, my gold price target is much, much higher. So really make sure you have a very close look onto this fantastic company. And please don't forget, they still have a lot of Dolly Varden shares in the treasury. They have a lot of optionality with Committee Bay, also with Eleanor South, meaning Eau Claire. And I must say, that company is really undervalued. Thanks for watching us, and bye-bye from Switzerland.